You're live now.
We are live now, so I'm going to call the meeting to order. This is Senate Finance, March 10th. And we are starting out behind, so we're going to move it along as fast as we can. This is, Jill Rickett was here 2 weeks ago, 2 weeks, to walk through the DFR housekeeping bill with us. And then I got a call saying the House was going to do the captive insurance housekeeping bill, but they were past their deadline and asked if we could get it through. And I said at that point, I think, it was the week before vacation, I didn't think so. And I was asked, would we consider amending it to the DFR bill? So I told David Provost to come on down and tell us what he had, and we'd see what we wanted to do with it. So David or Jill, I don't know, have you got this set up in any way?
I am just going to let David take the reins. I have
Okay.
nothing to add unless you have questions of me, Madam Chair.
I think maybe for a refresher, since we've been on vacation, at some point I'll ask you to just walk us through, the 30,000 foot. And well, maybe we'll do that now because I've got Abby is here. And Senator Hardy had a question for Abby. And Abby, are you there? Abby is there.
Yes.
And it had to do with changing the office. If someone lived more than 50 miles away from the main insurance office, Jill, can you refresh my memory? They could live out of state. And Senator Hardy's question was there any income tax implications? Whereas now they had to be located in the office. And so they were working in Vermont technically. And if we let them say their office was their home and their home was in New Hampshire, did we lose, was there an income tax? I think I've got that right now. So Abby, the floor is yours.
Great. So for the record, Abby Shepherd, Office of Legislative Counsel. Well, it's quite fact specific. In that particular circumstance that you're describing, if the individual is working out of state, if they are performing their services out of state, then that wouldn't be considered taxable income. However, if they are working a few days part-time in Vermont, then they would be treated as non-residents. So there could potentially be an income tax impact there, but it would be highly fact specific.
Probably not huge. Okay.
Yes, I would defer to JFO on, I'm not quite sure how you would estimate that, but I would defer to JFO to give you those numbers.
Jill, do you have anything that could enlighten us?
I don't. I just wanted to point out that previously someone could have their home in New Hampshire and work there with the current rule. We're just getting rid of the 50-mile rule. So if there was an office to which they're assigned in Brattleboro, and then they worked they lived across the border, that is still allowed under the current law. I think now it just would expand that slightly, so there's no 50-mile rule. So probably more people would opt to work from home, I would assume.
Senator Hardy.
Yeah, I just want to say Abby and I exchanged a bunch of emails on this, and I was just trying to do due diligence because we had just talked about this issue in committee and the tax implications of individuals for where they live versus where they work. And I think it's, as Abby said, probably not very many people that this would apply to. I don't think it's a big issue. I just wanted to do due diligence and connect the dots that of all the wonderful things I'm learning in the finance committee. So thanks.
We are just getting started. Okay. Thank you. So David, we'll go back to you and walk us through. I've got to get another screen up here. Walk us through what you've brought us. And can you put it up?
I don't know. Faith, are you able to post the bill on the screen? I don't know if
Sure, David, it'll take me a minute.
Okay. All right. Well, while we're waiting, one, thank you very much for taking this up, and two, I apologize for being so late. It's not our usual method to get things in this late in the year, but
I've told them all, usually you're what I fill up the first few weeks in January
Right.
with while we're
Right.
waiting for bills.
that's right. We try to do it that way and get
We're
it done early.
usually in early. I have a feeling you might have been doing some COVID stuff.
DFR has been extraordinarily busy. One, this was our busiest year in terms of new licenses in a decade.
Wow.
And we had
Well,
DFR
that's good to
staff.
hear.
That's very good to hear. We're at double last year's pace so far this year. And last year we had DFR staffers helping with payroll assistance, with Department of Labor assistance, unemployment, and a whole bunch of other projects. So it's been an extraordinary year, and this year looks to keep on going that way. So it's still, I think last year I promised that captive insurance might be the one bright spot in Vermont's economy, and I think that's really come.
That's right. We actually were picking some up last year.
We made net gains last year, and we're making net gains this year. And if you know any accountants that are looking for a change in career, send them our way. We can get them jobs.
Okay.
All right. So thank you. I can go through this in as much detail as you want. So I'll just start, and you can stop me if I'm saying too much. But generally, there's very little, although we have 20 plus pages, there's very little new language. Most of this is just changes, edits, things getting moved around, or blank pages because we have to give you the whole picture when we change one line. So the background is, this captive bill was written 40 years ago before we had any captives. And so things, as far as the formation process goes, the statute said do it in a certain order, do things in a certain order. And then once you get into practicality, well, that order doesn't really work. So what we're proposing here in the first couple sections is to bring the order into line with what actual practice has been for the past 40 years. And to modernize it, because there are things that we can do now that we couldn't do 40 years ago. We didn't have the internet 40 years ago. And things have changed. So this will both modernize and bring the statute into line with practicality. And those practical things were things like you can't open a bank account until you incorporate. And you can't put your money into that bank account until nobody wants to fund $1 million into a bank account on the hope that they're going to get a license. So we're just changing the order to make things work for businesses. So section 21, the first page on line 19 is our first change. It's a very simple change. Bring the statute into line. If you're able to scroll down a little bit, Faith. Down to line 19. We are just going to have companies appoint the Commissioner of Insurance as agent for service of process rather than the Secretary of State. That we assume that if an insurance company is going to be served, especially a captive, that if the Secretary of State is served, he's just going to hand it over to the Commissioner. So we'll cut out the middleman here and just put the Commissioner there instead. The next page, we have a little bit more meat. There's part of the order that the original statute called for was that you filed a certified copy of your bylaws, you filed a statement under oath of your financial condition, you contributed to your capital, and then you got a license. That order wasn't even followed by captive number 1. First, we'll give you a license, then you can do these other things. And so we're just proposing here to change the order of the statute to match with reality a little bit. So line 2, we're not going to ask for certified copies of the organizational documents anymore. We can go straight to the Secretary of State's website and look them up. So we know they're there. We know that they've been properly executed and approved by the Secretary of State, it cuts out that little step. 2, we're going to take this statement under oath in lines 3 and 4, and we're going to move it to after licensing rather than before. So that will come up in a couple of pages. There's nothing else on page 2. There's no changes on page 3. And then we get to page 4. And starting on line 9, if the commissioner is satisfied that the documents that the captive has filed comply with all the rules, the commissioner would grant a license. We're going to add in line 11 there that the commissioner is satisfied that the company has been organized. In other words, we're going to go and check the website at the Secretary of State and see that the company's been incorporated before we give it a license. That's always been our procedure. In the past, attorneys would bring us a certified copy of the Secretary of State's stamped articles of incorporation. Now we can just go look it up. We don't need to have people schlepping documents all over Montpelier when we can just look them up. So that's all that does. And then a little further down the page on line 16, we're now going to ask companies to do certain things before they get a license, or rather after they get a license, but before they start operating. So prior to issuing any policies or entering any contracts of reinsurance or insurance, they're going to have to capitalize. So that's all that line 16 through 18 does. If you go to the next page, at the bottom of page 5, starting on line 18, now we go back and say, okay, you've incorporated, we've issued you a license. Now, within 30 days, we want you to file that statement of your president and secretary certifying that the captive has, you can go to the next page, that the captive has that required unimpaired minimum capital and surplus, and it was in place prior to commencing business. So all we've done is just change the order in the statute to match the way things really were done. One thing that we do now when we issue a license is we issue a letter with it saying, here's any additional requirements that we're placing on that license. And one of those requirements is going to be, make sure that within 30 days, you file that certified statement with us under oath that you've contributed your capital before you start business. And then off you go, you're off and running. So any questions on that part? Nice thing is I can't see if you wave your hand or not, but
The kids, yeah, they're just holler.
All right. The next section, section 23, is a completely housekeeping item. Page 6, line 10, and page 7, line 16. When we created agency captive insurance companies, we did not specify what kind of annual statement they would make and when they should file that annual statement. So we're just adding agency captive insurance companies to those 2 lines in the bill. All right. Page 8.
Hey, David?
Yeah.
I do have a question.
Sure.
I'm hesitant to ask this question. I don't want to
Oh,
go
don't worry.
too much into the weeds, but you list a whole bunch, there's a whole bunch of different kinds of captives.
Yep.
The association captive insurance company sponsored, blah, blah, blah.
Yep.
What is an agency captive insurance that you're adding?
It's a new kind of captive that we added to the law 2 years ago. And we just forgot when we did that to add them to when they needed to report.
Oh, okay. So what is it? What is an agency captive insurance? What does that mean?
An agency captive insurance company is a company that is owned by an insurance agent or broker and reinsures some of the business that is placed by that insurance agent or broker. And we allow those kind of captives when either the agent needs to entice a insurance company to sell insurance to its clientele, as in, if you have a bunch of lumbermen or farmers, or if the insurance company conversely says, I'm not going to sell insurance to to your clientele unless you share a risk with me so that I know that we're on the same page and our interests are aligned.
So it's an insurance agency for an insurance agency?
No, it's an insurance company for an insurance agency.
Haha, okay. Thank you.
All right, very welcome. And do not be shy about being confused about these things.
We have all asked these questions in the past, and that list of agencies is probably a list of the last 5 or 10 years of captive insurance bills. It grows every year.
It grows. Well, and well, if you're confused by agencies, we're going to get you back into cells, which has always been the confusing.
Oh, God. Is that the apartment building?
It's the apartment building. I wish I could come up with a better analogy, but it is very much used in the same way. It's choosing to rent rather than own in some regards. And we just formed a cell for a huge nationwide big box retailer that certainly has a wherewithal and the sophistication to form their own captive, but they chose to go the cell route because, well, that's all they needed. They didn't need their own captive. They just needed an insurance transaction. So it works. It works for different people and for different reasons, but it's an important part of our business now, and it's still a growth area. So, which leads right into my little lecture here about cells. Just that they are
Not to be confused with the stem cell bill we just
nope,
did.
absolutely not. Absolutely not. So yeah, we do like the cell business. We've always looked at it as incubator space. You want to start small and have just explore the captive insurance environment. It's a great way to do that. It's easy entry, easy exit for companies. It doesn't require as much capital in some cases, and it just is it's a great way to start. And we do have some very successful group programs that started in cells and graduated to be their own individual companies. And so we do like to see that happen. So speaking of graduating from a cell to a full-blown captive insurance company, that's what this next 2 sections are focused on. And it's a little confusing that we are editing section 6034C, starting right there. Thank you, Faith. What we had was 2 sections in the law that one was completely included in the other. So we just need to keep the larger section, which encompassed every possibility, and get rid of the smaller section. The way we're doing that, though, is editing the smaller section and then deleting the larger one. So I'll bear with myself on this. Section 6034C, as you can see by the old title, it was protected cell conversion into an incorporated protected cell. That's all it allowed, was converting one type of cell to another. Section 6034E allowed the conversion of one cell type into another cell type or into another type of company. So it would allow the conversion of an incorporated cell into a standalone captive, for example, which is exactly the kind of thing that we want to be able to happen. So 6034E, which is now 6034C, just says that you can convert any kind of cell into any kind of other cell or any kind of other captive insurance company. So even though this is all, there's a lot of deletions and underlines here, this is all existing language in the statute. So 6034C, starting on line 6, is subject to the approval of the commissioner, with an application and all the information that we normally want to see. You can convert your cell into another kind of cell or into a new single parent insurance company, a new sponsored captive company, a new special purpose captive, a new, go to the next page, A through Z, any kind of captive that's on our list. And so again, the rest of the language on page 9 is existing language in 6034E. The only thing new is on page 10.
Wait, I'm sorry.
Yep,
I have
go ahead.
another question.
Sure.
What is a risk retention group?
A risk retention group is a certain kind of captive that is operated in Vermont. It's one of our larger, it's our primary group captive. It is formed under a federal law, but regulated by the state. And a risk retention group is a group, as it implies, of like businesses that get together to share a risk. And so very often hospitals form risk retention groups. They get together, a group of hospitals, a group of, one of our largest risk retention groups is a group of medical centers. It includes Johns Hopkins and a few other Northeastern medical center universities. They get together and insure themselves because the market won't. So that's what a risk retention group is.
Got it. Thank you.
Not likely that a cell is ever going to convert into a risk retention group, but we just wanted to leave all those doors open. But the new language is on page 10, starting on line 10. And it is fairly straightforward, just saying that as you're performing this conversion, you need to do it in accordance with the corporate law of Vermont, which is chapters 11 through 11C. So if you're a corporation, or if you're an incorporated cell converting to a corporation, you'd follow chapter 11A. If you were converting to a limited liability company, you would follow chapter 25 of Title 11. And those rules are pretty straightforward. They say, here's the Secretary of State's conversion process. And so we're just putting into the captive law that you follow the rest of the state law when you're doing this conversion. So that's the only new piece of that part.
Brock, you just popped up. Do you have a question? No, he's just, okay.
All right. Page 11. Section 25. Yes, we're repealing 6034E. That's all it does now that we've changed everything in 6034C by bringing all the language from 6034E. 6034E is superfluous and we can delete it. Section 26. Right now, when captives want to merge, when captives want to merge, they go to the traditional insurance laws for the process. Traditional insurers don't merge that often. Captive insurers merge fairly frequently, maybe once a month or more in Vermont, simply because we have so many. And the captive mergers come about when the parent companies merge. And that's at the parent company level is where all of the questions get asked about, is this merger appropriate? So for example, we're all familiar with AstraZeneca and Pfizer right now. Those companies both have captives in Vermont. If AstraZeneca and Pfizer wanted to merge, then all the questions about competitive issues and whether or not the merger of two major drug companies is appropriate and proper would happen in public hearings at the SEC and all over the place. And if they were allowed to merge and did merge, then the two Vermont captives would simply make sense to merge those two. But it would be the tail wagging the dog if I was to say, well, we're not going to allow the merger of those two giant Fortune 500 companies until I approve the merger of their captive. It will be something that's almost automatic. So when in a situation like that, all of these safeguards around mergers and acquisitions don't really need to apply to the subsidiaries of those merged companies. In fact, they wouldn't apply if those subsidiaries weren't insurance companies, but because they're insurance companies, we have a say. So all we're trying to do here is on line 12, I think we're on page 11. Line 12. If the shareholders of the merging captives unanimously approve of the merger, we're going to give them an easier route to follow to complete that merger. We already do that, frankly, in the traditional rules, because although we refer to the traditional rules, the captive law also already includes that the commissioner may waive many of these sections, specifically those sections that require a second board meeting or a 30-day waiting period, all those things that really aren't necessary when two tag-along captives are merging because their parents merged. So this, again, provides that if everybody approves unanimously, we're going to give you this route to follow directly in the captive law rather than referring you to the traditional law. So that's all those three lines accomplish there is we're going to give you a new section 6006A under a unanimous approval. And-
David?
Yep.
I'm sorry, I have a question about that one.
Sure.
You said you started with your explanation saying that if two corporations merge, there would have to be approval likely at the federal level.
Right.
But is there somewhere in here that it references that? It doesn't in lines 12 through 14. It just says if the
No.
shareholders, members, and policyholders approve, but you don't reference the federal approval.
No, we never have, and I don't see that we need to. We're talking about mergers of subsidiaries, and so the merger at the parent level won't happen without all the other approvals. So all this would be moot.
Okay.
Good question though, but that's I haven't even thought of that question. But so on page 13, start with line 14 is where we introduced the new sections for merging captives, provided they met the requirement that everybody was unanimous, everybody approved. All of this language from page 13, line 14 through to page 14, line 17 mirrors current language in the traditional merger law, with the exception of page 14, line 7, we've added in or other consideration. Was simply, that simply left that open if there was something other than ownership interests or securities or obligations, which might be the case with a mutual insurer where you don't actually have ownership interests or reciprocals. There are kinds of captives that you don't own. They are unincorporated groups in some cases. In other cases, you don't own a piece of a mutual except by your participation in ownership of a policy. At the bottom of page 14, this is where we make a few changes that, again, just refer to as long as everybody agrees that it's unanimous approval, then, just give notice of the meeting to the shareholders or the members so they can agree to adopt everything at the meeting. Page 15, the only change we made is on line 7. We added the word unanimously because section 3 here automatically follows section 3424, or its analogous section in the traditional law, except that we added unanimously to make sure, again, that anywhere in this step, if the unanimity, if you don't all agree, you go back to the old law. And I'll practice saying unanimity some other time.
Guess I better practice it before the floor now that you've got me. It's going to be a
It's like-
self-fulfilling prophecy.
It's like yawning. Now you're all going to have a hard time saying it. So
Right.
there are some changes on page, starting with line 9, that just simplify things. And these really are leaving out the parts of the process that we already waive or automatically exclude. And again, those processes, let me just get them out here. There is a process in the traditional law that allows for shareholder objection. We've already gone through unanimous approval, so there should be no objections, although if you do, then you can remove your approval. But we don't need to provide for a shareholder objection anymore since they've already all approved of it. And likewise, the current law, you know how frustrating it is when you hit print on something and said, do you really want to print? The current law says after you've done all this and passed your resolutions with the two boards of the two companies, now you're gonna have to sit and wait for 30 days and go back and prove them again. So we've removed that because it was already exempted in the statute. So the whole point of this really is to make it easier for people to follow when they are merging their captives, not have to refer back and forth to other statutes. And our experience is that people really want to follow the rules in these things and don't want to have to get waivers and exceptions. So this helps take care of that. On page 16, section 5 is new, but it's pretty clear. It starts on line 6. After you file your articles of merger with the Secretary of State, the current law says you file it with the commissioner who then gives it to the Secretary of State. Nobody's ever done that. We've always told them just go straight to the Secretary of State. So we're cutting out things that are in process in statute that have not been followed for years. They've just gone, if you need to deliver something to the Secretary of State, deliver it to the Secretary, don't give it to the Commissioner to deliver. Just go ahead and file it with the Secretary of State and pay your fees. And if the Secretary will then approve the merger, issue a certificate, he doesn't approve the merger, the Commissioner will approve the merger, the Secretary will issue the certificate of merger and then give that to the Commissioner and give that to the company to file with the Commissioner. Everything else from page 16 to the bottom of page 19 is copied over from the traditional merger and acquisition law, with the only substantive change, or the only change being we don't refer to consolidations. Traditional law talks about mergers and consolidations. We're only talking about mergers, so we remove the word consolidations.
Okay.
All right. So we get to the very bottom of page 19. And
Domestication.
start with section 28, redomestications.
That's what's happening to the president's dog. He's getting re-domesticated.
Exactly.
Okay.
Although, yeah, we're not forcing anybody in or out. Redomestications is an important part of our operation. You know, captives move. It's a fact of life. We are generally on the winning side of that. We have over the years moved 100 captives into Vermont and 60 captives out. So it is an open door both directions, but typically we move captives from offshore domiciles to Vermont, and captives typically move out of Vermont. In most cases, because they're going someplace where the parents' headquarters are, and we now have a captive law in that state. So we lose some, we win some, but on the whole, we've won a lot more than we've lost. And again, we just want to make sure that the process is straightforward and clear. And just like with mergers, we currently refer to the traditional law. There's enough nuances that we think it's worthwhile to bring it into the captive law. So that's what we propose. There are very few changes, and I will tell you that the only significant change is on page 20, starting with line 10. All this is copied from section 3437. But line 10 just says that the captive intending to move to Vermont is going to pay us the fees that we would require of a new company. So they'll pay us a license fee and an actuarial review fee. Lines 13 through 16. This has never been in statute, but it's been practiced around the world as we go, is that the commissioner of the state where the company is, or domicile, where the captive is moving to, will issue a conditional certificate of authority. We'll issue a conditional license that says as soon as you're done redomesticating your corporate entity, your license will be full and complete. In the meantime, here's your insurance license that you can now give to your current insurance regulator to say, yes, Vermont is accepting us. And so we're going to move to Vermont. And then the rest goes back to copying section 3437. On page 21, this refers to section companies that are moving out of Vermont and essentially mirrors the same process. And so it adds on lines 11 through 13 that, once the state where you're going to has accepted you, we will ask them to give us some proof of acceptance, which is normally going to be a conditional certificate of authority. And page 22, again, is analogous to section 3439 of the traditional law. It's all new to the captive law, but it's the current law that we follow. In sections 29 and 30, which is line 19 on page 22, and line 8 on page 24, these we are simply asking to change the service of process for a risk retention group or risk purchasing group that is not based in Vermont, ask that the commissioner be its registered agent in Vermont, and that is in compliance with the Federal Risk Retention Act. So that's all we're trying to do there, is serve the commissioner rather than Secretary of State. That's what other states are going to be expecting, or companies will be expecting if they are risk retention groups operating in Vermont but not domiciled in Vermont.
Can I ask another question?
Absolutely.
Yeah, I'm the new girl, clearly, but the whole section about mergers, you say that it's basically mirrors the corporate merger statutes, right, in Vermont law, that's currently in Vermont law.
Yep.
Is there a reason why it needs to be reprinted? And I know there are some changes you did reference. There are some areas where it's a little bit different than the corporate mergers, but is it just because it makes it easier for these companies? Or because usually in statute, we try to be fairly, I can't speak for the attorneys, but they try to be fairly good at just referencing a cross section rather than reprinting it.
It is, I got to say for now, primarily it's to make it easier and simpler and more straightforward. I expect that as we go further down the road, we might want to, now nuance it a little bit more to be even more suited towards captives. Otherwise, yeah, and we already have the authority right in statute to waive these sections or certain sections apply. But I think that we will probably want to polish this as we go down the road. And so having it now in our section rather than the other section will make it easier to do that too.
Oh, so you're just setting it up so you can have an annual captive bill. It's like a little, it's something you can play with every year. I see.
There's all sorts of good reasons. We do like to come and make sure that the legislature is involved in the process and knows what's going on in the captive world, so that when we have serious things that are more momentous, that we can work on them.
Got it. And just one technical thing at the end, there's no date of when it becomes law. I'm blanking on the word, but I'm assuming it's upon enactment or July 1st. What is?
I think this will go with whatever's in S288 already as far as the effective date.
Okay, thanks.
Okay. All right, it's down. Committee, any questions? Okay, so David, basically what you're doing is you're modernizing the captive merger statutes. And you're taking you're taking your general insurance merger laws and you're fine tuning them so they work better with captives and the reality of captives.
Yep. And in a way, this will help. I was thinking about this, that we're going through almost a generational change now. There are a lot of us that have been working in captives for 30 years. And now we're getting a lot of new people. And it's a lot easier. So that we're starting to actually see people that they're following the statute and sending things to the Secretary of State that nobody sent to the Secretary of State for years. They've always sent to us. Or they're doing things in the order of the statute. Well, it's time to make sure the statute reflects what really goes on and is something that people can clearly and readily follow. I think that will be helpful, including in the mergers in all these processes when we have, particularly if we have out-of-state attorneys that are doing this. Typically, most of the time this is done by the 3 or 4 law firms in Vermont that specialize in captive insurance, but there's no requirement that a Vermont law firm do this. So when you have an out-of-state law firm do work on a merger or acquisition or new license even, it tends to be a little confusing. We have to keep straightening them out and pointing them to, yeah, I know the law says this, but this is how it's done. So I think this will help.
Okay, yeah, and didn't we, I think it was the banking bill, we moved sections around because for those, especially out-of-state folks, you got a reference and you had to go to another tome to figure that out. And so we tried to get it all in one place. So you read it and you knew what it was. You didn't have to jump all over the statute. Okay. Because that's some of what we're doing here. Well, it's the present law, but it's the present law in the insurance statutes, not in the captive insurance. So you're moving those in and in some cases tweaking them.
Yep.
That's okay.
Yeah, thank you.
Okay, committee questions. All right. I'm sure I'm going to get a lot of volunteers to present this, which is why I'm taking copious notes. Jill, do you want to walk us through what we're being asked to attach this to? Just to refresh our memories as to what the underlying bill will be?
Sure, I'd be happy to do that, Madam Chair. And I will go fairly quickly since we walked through this in detail before, but do feel free to stop me at any time if you want more details.
I'm assuming you can send me a summary or crib sheet.
I have already done so, but I will re-forward it so it's at the top of your inbox.
I am, as Senator Kitchell said, I am 500 deep in email. I will find it. I answer 2 and 3 more appear, so it's that time of year.
Completely understand that.
I want to keep telling them I can't support a House bill. I'm getting more things on supporting House bills this week. So, but it causes things to drop. So I will find it. And then David's going to send me one. And we'll be good to go.
Okay, so S88 is an act relating to insurance banking and securities. The banking provisions we are proposing to change are to, section 1 is to clarify the titles and terms that may not be used by unlicensed entities to prohibit them from using words similar to the specific terms that we've prohibited. Sections 2 and 3 are to eliminate the combination non-bank license that was giving us a lot of trouble with our online national multi-state licensing system. Section 4 was to increase the penalty for failure to timely file an annual report, because a lot of our licensees tend to ignore that, and we want to make it worth their while to file so they don't face a fee that's actually means something to them. And that would be from $100 to $1,000 per month. Section 5 would be to eliminate mandatory annual reports for independent trust companies and make that the timing discretionary at the request of the commissioner.
Isn't that because is this the one we only have one in Vermont?
We have 3.
We have 3. All right. I know
We
it's
have
a
3, and
small number.
Yes, but we request those on a more frequent basis than annually. We request them either monthly or quarterly for each of those companies.
Is what I remembered. Okay.
Sections 6 through 8 are to permit both mortgage loan originators and employees of other non-bank licensees to work from home without obtaining a separate license for their residence as a branch. And this is the one that Senator Hardy had the tax questions on. Section 9, and this moves to insurance from banking. Section 9 would eliminate the requirement to return licenses, paper licenses that have been suspended, revoked, or terminated. We use online electronic licensing, so we don't need those back, and we haven't asked for them back for a number of years. Section 10 would clarify and simplify the confidentiality protections for reports and records of investigations and examinations of regulated insurance entities. It would sort of put those all into one place the way that we do currently for banks and securities entities. Sections 11 through 16 are a lot of words that basically revise the risk-based capital standards for HMOs to bring us into compliance with the accreditation standard and the NAIC Model Act for RBC. Section 17 would extend the sunset for the insurance regulatory sandbox by 2 years. Pardon me. I have a friend.
We have met lots of friends in the last year.
Wednesdays are tough. They're remote days, so we make it. Okay, and then Section 18 for securities.
Senator Pearson is agreeing.
I'm sure. Section 18 would clarify that the securities filing fees are non-refundable in all circumstances, which is our current practice, but the words sort of only specified the times when they are the filing results in a denial or withdrawal. And then finally, another insurance provision is Section 19, which would revise and clarify the grace periods for major medical health insurance policy premium payments to match what's required under the ACA. And that's it.
Okay. Questions, committee. I'm going to let this hold over for vote. But we need to get this out of here this week. So I will put it on for a vote. If anyone has questions as you contemplate this. Senator Pearson.
Sure, because we have to make a decision before too long. Jill, could you just talk again about the fee implication? You said something about a range of fees. Does that reflect a change, or just review that again for me?
Are you referring to the increase of the penalty for failure to timely file an annual report?
Well, I'm not sure what I'm referring to. You just said something was between, something and $1,000, and
oh yeah,
is that
that's
the
it.
Penalty.
Mm-hmm.
Okay.
So it's a penalty for when a non-bank licensee fails to file an annual report, but by the due date. Currently, the penalty is $100 per month, which a lot of people, it's a drop in the bucket and they just choose not to do it. And it's not really an incentive to get that report to us. We need those reports in order to understand the type and extent of the business being conducted in Vermont by licensees and to conduct the appropriate examinations. So we are proposing to raise that to $1,000 per month or any part of a month to sort of incentivize the filing of those reports on a timely basis.
All right, thank you.
Okay. Any other questions? Okay. I'm going to put this on for a vote probably Friday because we're getting pretty full tomorrow, but make sure you get questions to me before then, because Friday is our last day. This is a bill that has come to us. And the first thing that I'll need is a vote to amend by adding the captive language. So let it just percolate and see if you come up with questions. Okay. I think that's it. Thank you. I think we're going to get it out. We usually do. And I'm going to go back and file. I'm going back and somewhere I'm going to find my agenda. Okay. All right. Okay, so we are 7 minutes behind, which is just about perfect because we started later. We're going to move to S60, then we've got a break. S60 is the municipal and corporate cooperative utilities. It's S60. This is the innovative rates and services. This is another one that has to come out this week. Thank you, David.
Thank you very much, everybody.
If it's going to go anywhere, and it is on for discussion. Ellen is here with us. Is this another one you inherited, Ellen?
It is. Hello, everyone.
Hello.
Happy crossover week.
Isn't this fun? And we get another week to do this. Actually, this one is pretty
I think you're
laid
close.
back. Last year it was a lot worse, and I was just saying, whoa, we made it. And we were told, and you're going home. And we never really got to do all of the bills that were still waiting. So today, this year, it's definitely not. I have a feeling though, by the time we go through crossover, that the second half of this year, just hearing the bills that are headed our way, it's going to be a lot more challenging. Because we've got several committees that have been working really hard to send us all their magnum opus. So I was going to have Ellen walk us through this because we seem to have the whole bill here, right? Yeah, not just amendments. So Senator Sirotkin.
This is the alternative rate filing bill, right?
Yes.
So just a question, are we having?
You need to get closer to your mic, Senator.
Are we pretty much done with witnesses at this point?
We can have any witnesses you would like. We haven't.
The only thing I want, and it doesn't have to be it could be in writing. I was curious, there was a document that was sent around that showed all the savings to ratepayers.
That was from Senator Pearson. It was from Riley Allen.
Okay, so have they ever told us why they have no concern about protecting all those millions of dollars?
No, they would like the munis and co-ops to have to report. Right now, the testimony was they avoid this process like a root canal, to go back to the dental images. And they are only going in about once every 10 years for a rate hike. The department says they think they should come in for a look-see every 7 years. We presently don't mandate that they go in until they are looking at a rate change. I think that might be a decrease too. So I believe what Riley said is fine, give them the flexibility, but make them come in. And I remember the 7 years. so that we can just take a more detailed look. They can ask to have them come in anytime they adjust a rate. Or I think the last draft, we saw 5 ratepayers could ask to have them do a full-blown rate case.
So my concern would be, I think it's common sense to think that if I'm understanding this right, because I remember this from GMP in the debate like 5 years ago with ARP involved. If they can adjust their rates without review for 5, 7, whatever years, even if you have them come in for a full rate review at the end of 7 years, human nature is that it's going to be really hard to say those increases over the interim 7 years were inappropriate or too high. They're just going to accept those and move forward. And I just want to make sure the ratepayers are not losing out in this deal. I totally understand the arguments of, administrative convenience and cost of legal fees, and these things can get very complicated. I just wish there was some check somewhere. Maybe you can't have your cake and eat it too in this bill, but that's what I was concerned about.
And there are 2 sections to this bill. The second one allows them to do some experimental rate setting. I think the type we've seen with electric vehicles or off peak to plug in your electric vehicle, or
I have less concern with that part for sure.
yeah. So I know the other body is interested in both parts, our counterpart. We can strike the first part because we're not ready. And send out the second, which we haven't talked about a whole lot yet. And we could make some adjustments to the first part.
I guess I
or
would
do
say-
nothing. I mean,
No, given that I brought it up, I guess I would say I'm not ready to strike anything, but I would like to hear from, I guess, Riley again to answer that question.
okay, Faith, maybe you could drop Riley a line, and probably, I am forgetting her name, the Vepsi,
Melissa Bailey.
Melissa Bailey. See if either one of them are available.
I know Melissa is, and I'll look for Riley.
I couldn't
both.
imagine Melissa's letting us talk without being tuned in somewhere.
Thank you.
Okay, Senator Bray.
Well, I thought that, let me just double check. Make sure I'm remembering right, that there was kind of a strange thing going on where in order, we wanted to have people come in and go through the process just for the reason Senator Sirotkin was talking about. That way there's a truing up. If there's a way to save ratepayers money, you learn about it sooner rather than later. But it seemed as though if you were going to leave the current law that you're actually never compelled to show up, then adding a feature that says you must come in to the gaining access to the smaller rolling rate increases seems like a disincentive to get people to enroll. It's like you're adding a burden that they don't have if they don't come in. So it just seems to me like we might say everyone has to come in at some interval. And then you would take that piece out of, you would eliminate the worry that people would stay out, if that's the concern. I get it that it's a price of admission. You have to go through a real rate case to get into the special treatment. But if it's that people don't want to show up, period, if the special treatment isn't enticing enough, maybe we just say you can do it now or you can do it later, but there's at least we've got something of an incentive to offer for coming sooner rather than later. That's all.
Remember when we talk about ratepayers here, these are all subject to votes. either by the governing board who is elected or by the membership. So the ratepayers, and that was Senator McDonald's point, and I think we got quite a bit of language in on that. The ratepayers have a say early on. And then if 5 of them aren't happy, they can have a full-fledged thing. So Senator Pearson.
I've been wrestling with this, and I hope we can get the direct question answered from Riley. Of, you know, the way I think of it is this: when they are applying, first of all, ratepayers have already approved, right? Before they go in, oh, here he comes. Before they go in to get a rate approved, the voters or the governing body have already signed off. I want to make sure of that.
Or the government.
Ellen, could you confirm that for us? Before a co-op or a municipal utility goes to file for a rate review, have voters or the governing board already approved that rate request?
I don't know the answer to that. And I did look for it, but I don't know. But I suspect one of the new witnesses may know.
Okay, that may be one of our switching drafters in midstream with
Sure. No.
different styles and
So
short.
I think it's a straightforward question. I'm pretty sure the answer is yes, but Riley.
That was it. That was my understanding, but it may have been something we requested that didn't get drafted and added in as we.
Well,
did the
I think the
switch.
current law, Riley, can you confirm this? The current law for municipal utility is that voters approve a rate increase and then they come and request it. Is that correct?
Depends
I
on
don't know. I have to defer to Melissa. I mean, voter approval's in there somewhere, and I think that that's generally the case, but it may not be always the case. So I'll defer to Melissa on that.
Donald, this was your issue.
Madam Chair, each of the municipalities and co-ops likely, I'm sure, have their own bylaws. And all the bylaws probably share some similarities, and probably the differences in bylaws are all unique. And there should be a minimum requirement that the bylaws include notification to the customer owners and an opportunity for customer owners to weigh in.
Hold on a minute. Wait.
Public hearing.
You do not have the
before
floor,
any
Senator
decision is made.
McDonald.
I will.
Wait.
Yeah.
Let's.
I'm just asking a very simple question about how the law is today. I'm not interested right now in Senator McDonald's opinion.
Okay, Melissa's on. So Melissa, is the situation today that before a municipality or a co-op, your members can do a rate increase, or I assume a decrease, that they are required to go to some form of membership approval, be it members or municipal, the vote of the select board frequently or their governing board. And is that the present situation?
That's right. There would need to be a vote by the governing body in under the current structure and under the proposed structure. The piece would remain unchanged. We would always, the VEPSA municipal members would always need to get the approval through a vote of the governing body, not the ratepayers, but the governing body prior to filing any rate adjustment with the state under the status quo current system, as well as under this proposal.
Okay, and this is central to my understanding anyway. So, because it's been suggested that voters or the governing body provide this check, and the data suggests that that's only been so effective, and that in fact the rate review has saved ratepayers millions of dollars. And this is what I'm struggling with, because if we streamline this and allow for an up to 2% sort of automatically, or pretty close to automatically, it seems to me that will happen. You will see rates go up because the instinct has been proven to be, in some cases, to ask for more than what the PUC grants. And I'd like to understand why anybody doesn't think that's the case. I mean, why would we assume that the PUC process has worked if you want to save ratepayers money? And why wouldn't we assume that making it a little easier will cost ratepayers money?
So I think
I've got another question on that one. If they're only coming in every 10 years, and that's a concern to me, I think if you view this process as very expensive in a root canal, I would assume you would maybe pad your rate a little bit in order to not have to come in a hurry. And if the PUC steps in then and said, I don't know, is this enough for 10 years or is this enough for 2 years? What time frame are people working in? I think it's an issue they don't come in until they need a big rate increase. So Melissa, you started.
Sure. I think we draw a different conclusion from the supplemental testimony that the department submitted. And, looking at the example, well, I think I do want to take issue with whether it's a foregone conclusion that the incentive is there to seek more than you need. That's not the way that the VEPSA members operate. As nonprofit entities, there's actually no incentive at all to seek any more revenue through rates than are needed to actually operate. And I think in the case of Swanton, which was kind of highlighted in the DPS memo, they had to come in 3 times in order to get the revenue that they had requested up front. So yes, there was a reduction in the request the first year that wasn't collected in rates, and then they had to come back within a couple of years and then come back again in a couple of years. So I think we have a different view of whether those are actually ratepayer savings. To the extent that there ever is extra money at the end of the year from one of these municipal electric utilities, that's still ratepayer money. It's not gone, it's not profit, it's in the bank essentially for use by ratepayers. And so the VEPSA members take that responsibility as extremely seriously. And again, to the extent they don't perfectly estimate exactly how much needs to be collected, that revenue is still there. It's used to offset future costs of the utility.
But in the example of Swan, so does everybody have this chart that I think is, I mean, maybe it's not.
It's worth looking at.
I could share it if you like.
I am looking for what. It's not up today.
I think Senator Pearson said he could share it.
Okay, that would be fine.
Oh
Keep
boy.
us all from playing the screen game.
Let's see if this works.
There you go.
You see that? Can you see what you want to see? I don't know. I don't know what you can see now, but
I'm not see how much of it I'm seeing.
do you see the column that's all the way over to savings? Do you see my mouse?
But I'm trying to, yeah.
So
I've got your face in the way. There we go. I just moved you. Now I can see the savings column.
So, I mean,
Okay.
I don't know what to make of this, but it said, Melissa, help me out. Yeah, Swanton came in for 10.6. They got 1%. Then you say, well, then they came back, and it's true. A year later, they came back for 7.4. They got 6. And 2 years later, they came back for 4.5. They got 2. They still never got 10%. So I don't know what to make of this, but this chart would suggest that the instinct of the utilities and the voters is more generous than the analysis that the PUC actually creates with the rate review. And if we're foregoing the rate review, then it seems like we're going to predict that the rates will increase more than they are today. And I'm all for the innovative side of that. I'm nervous. I need some reason to think that I'm wrong in those assumptions. And this is pretty compelling. Barton, 4%. They were knocked down. They haven't been back in 5 years. So I don't know about the timing. These are pretty compelling. This chart says to me, the current process works if you're interested in saving ratepayers money.
And I think that essentially, I think that it's being framed as a false choice. I don't think regulatory review is being sacrificed under the proposal. Again, a lot of these rate cases that are highlighted in the DPS memo are for above 2%, which is the threshold in the bill. And even absent that, any rate adjustment, even under 2%, could always undergo the full DPS review. So there's really not any protection being sacrificed. The department, if there was any concern with any rate increase, no matter how small, could always undergo this process and acquire these savings if that was seen as necessary. So essentially, what the municipals are asking for is a streamlined process if regulators don't raise a concern. We would be providing documentation accompanying any minor rate adjustment, and it would be incumbent on the DPS or the PUC if there were any concerns that the rate being asked was excessive or above what was absolutely needed to run the utility. So I guess I think it's an opt-in. You can have a streamlined process, but the full regulatory process is always there as the backstop. And so to the extent that that is delivering value to these ratepayers, that exists.
In each one of these where they had to go back, are there the same kind of legal and analytic? That's a cost that's going to go to the ratepayer. It may not be reflected in the rates, because that was your original argument, that it was very expensive. And if it were contested, it got even more expensive, which hit the ratepayers.
Right, those costs do need to be paid for by ratepayers, both the utilities costs of preparing the rate case as well as the regulators' costs. Essentially, ratepayers are always on the hook for the dollars. And so to the extent that there are more frequent rate cases than are needed, that's a cumulative impact on ratepayers from having to go through the process multiple times.
All right, and the saved money, you've said, the money that when you didn't get the rate that was asked for, and in that saved column, the 112,000, if the rate had been what was asked for, that 112, that savings would have dropped to the bottom line and been there to cover next year's costs, or it's not like it's just gone. It's not gone to any kind of a corporate shareholder. It falls to the bottom line and still belongs to the members of that utility. I think that's what I heard you say.
That's right. And in Swanton's case, had they gotten the original 10.69%, they would have collected the revenue. They would not have gone back in for a rate case subsequently. To the extent that there was excess revenue collected, it would essentially be in the bank. I think in Swanton's case, they did some creative financing rather than purchasing. They were able to manage their finances over this 5-year period to ensure adequate cash flow. But I think it made it tight operationally, would be how I would characterize that, until they ultimately ended up getting, and I think what they ultimately ended up getting was the 9.8% as opposed to the 10.69% that was initially requested.
Okay. I'm going to take Senator Sorokin if you've got a question, then I'm going to Riley for a
May I, Madam
response.
Chair?
Thank you, Madam Chair. I'm glad you're going to Riley because that's where I want to go. Melissa, I totally respect what you're saying, and I don't think necessarily there's any knowing. You say there's very little padding or anything, but this chart befuddles me because it does show that the rate requests were way above what was ultimately granted. So when we had the same issue, analogous issue with the private sector, we looked to the Public Service Department, who's supposed to be an advocate for ratepayers, what their position was back 5 or 6 years ago on letting GMP go to alternative rate. I was kind of disappointed where the Public Service Department came down, and it was up to consumer groups to argue for the full-blown rate case. But I want to hear what the department says about this charts in front of us. I mean, did the PUC or the department save ratepayers a lot of money, and are we potentially losing that kind of scrutiny? That's where I started off the hearing.
Riley,
Thanks.
thank you for being available at short notice.
I'm sorry, I had to scramble to put on a tie.
No, yeah, minimal dress code here. When we call you in with 5 minutes notice, but this is crunch week, so.
Yeah, no, I understand. So yeah, I mean, we think this, we find things when we look at these cases, and we think there's a problem. We dig in and dig deeper, and in most cases, these things get litigated, but they also get worked out. So it doesn't necessarily, just because you're seeing numbers on the right, doesn't mean it went through the full-blown hearing process and so on and so forth. But these numbers are ratepayer savings, at least for a period of time. So in the first instance with Swanton, there was at least a year that ratepayers went without having to bear that extra $637,000. A year later, it was just 90,000. But then, it was another 2 years essentially before that last tranche. But each year, it's not just the year that the savings occur, it's actually the passage of time that is all kind of creating a ratepayer benefit. And there are lots of reasons that that's important, but one of the reasons that the commission and we kind of point to is in many of these service territories, the body of taxpayers and the body of ratepayers aren't the same group. That there's, the ratepayer impacts are different than the body of voters in the community, and that are essentially well represented by their select board. That said, these rate impacts extend throughout the service territory to both those beyond the boundaries and to those ratepayers. But yeah, we're proud of the work we do. We think we do a good job. We are representing ratepayer interests. We also, if you look at these numbers, you see that at least with respect to the smaller systems, they wait. The numbers get pretty large before they come in, and that is kind of a concern to us. We think that we would like them to come in and manage rates on smaller increments. And my concern is that they are essentially digging deep and holding back until the numbers are pretty material. And we don't think that's a healthy dynamic. So some measure of kind of flexibility makes some sense to us, especially given, as Melissa had pointed to, we do have the backdrop of our stepping in at any point in time and representing ratepayers if there is a proposed increase.
Okay, Senator Hardy. Okay.
Thank you. So I'm a little confused, but I'm looking at the current statute, and so maybe this is a question for Ellen. What I seem to recall was that there is an alternative rate process for Green Mountain Power and the private companies, but there's not for these little munis, or for some reason the other process doesn't work well for the munis. And so is that correct? Do I understand? Like, Riley, do I understand that correctly?
Well, I would say it's available to all, but except for Vermont Gas, former CVPS, and Green Mountain Power, none of the utilities have stepped up to participate in the 218D processes, that alternative regulation of option that's available.
Okay,
It's
it
available to all.
is 218D. That's where I'm looking right now. Okay. And so this whole bill was proposed, S60 was proposed in order to have an alternative rate structure process that would work for the munis. Is that?
Well, I mean, Melissa and others can speak to the rest of it. I know from the department, we were focused on the Section 2. So we were focused on the innovative rate component of this. So providing the kind of flexibility that is exercised by Green Mountain Power in introducing and piloting services. We think that should extend to all of our utilities, whether frankly they exist within a formal alternative rate structure like Vermont Gas and Green Mountain Power or not. So we thought that the Section 2 component is good and desirable, regardless of whether they exist within a formal framework or not.
Okay. And so when I'm looking at the bill, when I'm looking at S60, people keep referring to this as Section 2, but there are two sections to the bill. There's Section 1, which is basically the bill, and Section 2 is the effective date. So which specifically are, what paragraphs or lines or pages are you referring to specifically?
Okay, I'm sorry, I don't have the.
Ellen,
link.
can you?
Ellen?
Yeah, he's looking at subdivision O. So
you.
that starts the sort of innovative components related to tier 3. So that starts on page, so subsection O, and there's subsection N. I could put in
Oh, okay. It starts with on line 9 on page 2. Is that correct? And it starts with the word notwithstanding, and it notwithstands a bunch of things.
yeah.
Okay.
I could do subdivision headings if you would like. I contemplated that, if that would be helpful. But
It's just confusing to me when people are saying Section 1 and Section 2 of the bill, and that's not actually what it is. So,
yeah,
okay.
well, N and O.
N and O. Okay. And then, so, in my notes, you guys know that I take notes. I have like Melissa's proposals, Riley's proposals, and then Mark's proposals. And some of them are in the bill highlighted in yellow, Ellen, and some of them aren't. And I'm wondering, so one of the things that I completely agree, share the same concerns that Senator Sorokin and Pearson, and I think McDonald, have about, this process where the review saves ratepayers money. And I also am concerned with us having one thing that works for the big guys and then something that doesn't work for the little guys. So that doesn't seem fair to me. So I'm trying to figure out, is there a way to compromise where we have the protections in place? And some of them, like Melissa had proposed a 10-year cumulative thing. Riley actually said 7 years. But I don't see either of those in here, Ellen. And I'm wondering, I don't know that we ever agreed on anything, so that's probably why it's not in there. But I'm wondering if there are some parameters we could put in, and maybe language about when DPS does do the rate review, they shall take into consideration these 2% increments as part of the rate review. In other words, I think Senator Sorokin said something about DPS will just ignore or take into, forget the fact that there were these automatic 2%, but maybe we put language in that says they have to take those into consideration and that people need to come back in every few years or something. I'm just trying to figure out if there are ways that we can have this equitable system for both the big guys and the little guys, but also protect the ratepayers. So that's sort of where I'm at.
Of course.
And if you want me to go through the list, I have the list of all three of what they were proposing.
No, I think Riley's solution was they could have, and you can check your notes, we're going to have a note off between you and Senator Nitka. See who is best.
She has many more years of practice than I do.
She is unbelievable. Riley, I thought your proposal was that they could do the flexible rate, but they would have to come in to DPS for some kind of a look-see, not necessarily a rate hearing. Is that what did I get that right?
Yeah, more or less. I mean, we want a formal kind of rate approval. We want a commission level kind of review.
Okay, so you want a formal rate approval at least every 7 years.
To preserve the flexibility. They could actually extend longer, but it was, if they want to continue to have that 2% flexibility, they would come in for a formal rate review.
Okay. And it sounds like that's where Senator Hardy is going. Melissa, I'm having flashbacks to my days of coming up with a charter change and having the legislature rewrite the entire charter of the city of Montpelier, including giving the mayor the right to vote. And I'm a little nervous about you brought us something and perhaps sending you out worse off than you were in however way you want to look at it. Maybe it's, but I want to give you a chance to touch. The other possibility is we strip this section. We haven't even talked about the ability to do section O. We keep that. I understand that the other body is interested in working on this flexible rate, and we might, they might have more time than we've had to work on this. So I don't, is this a fair question to ask you now?
Sorry, I'm not sure I quite got the question. I don't.
Okay, I mean, one of the solutions is that you get the flexible rate, and I'm not clear on whether or not, if you never raise it 2% without a rate hearing and you wait 10 years, as many seem to be doing now, would you still be required to come in every 7 years, which might be a concern. But if you take up the flexible rate, then at least once every 7 years, you would have to come in for a formal rate review. And that's not what you asked for. And I'm wondering if your membership might regret ever asking.
What's the problem that we're trying to solve, Madam Chair?
I will leave that to Melissa.
Yeah, thanks. And so there's a few questions in there. I think we largely agree with the department on this piece of what is the problem we're trying to solve. One of the problems is the avoidance of rate cases due to the burden and cost, and generally staying out of that process because it is viewed as a painful process and a costly process for ratepayers. I don't think that there is a risk of the municipals being worse off than they are today, I would say it limits the utility. I don't see many utilities taking advantage of the rate flexibility and accomplishing that goal of more frequent check-ins or rate reviews, or however you want to term it. If there's this standing requirement that every 7 years they need to undergo a full rate case. They don't want to do that every 7 years now. I don't see them doing it if the legislation passes.
We would accomplish nothing. And Riley, is your proposal that even if one utility chose not to do this flexible system, that whether or not, if we put the flexible system in and says you can use it and nobody chose to use it, they would still have to come in every 7 years?
There isn't anything that requires them coming in every 7 years unless they are interested in the flexibility that would be accompanied with it.
Okay, so that would be the decision of the individual utility, whether or not they wanted to do that. Okay.
They're no worse off.
They would be no worse off. We might not be any better off.
That's right.
Okay. All right. Senator McDonald.
So, Madam Chair, there are two things to state. One, we've talked about how the munis are not there are not a lot of requests for rate increases. And one of the suggestions has been made that it's too expensive and they're waiting for 10 years to avoid expenses. 20 years ago, when the energy efficiency utilities were put in place, the cost of electricity has dropped compared to the previous 20 years. We use 15% less electricity today than we used to.
Okay, we'll see that.
And natural gas has replaced many of the more expensive fossil fuel generators. So one of the reasons and main reasons that utilities haven't been in to ask for rate changes has been because their expenses have not been going up at the rate that they were in the previous 20 years. I would add that you and I and most folks here will remember when GMP and Central Vermont Public Service merged, and many of us were saying, how come you're not coming in for a rate decrease? Because the argument for the merger was substantial savings that would be made. And somehow the new Green Mountain Power was not obliged to come in. But
all right, that's Green Mountain. Can we stick to this? We're cutting into the break time, guys.
Yes, Madam Chair. These utilities are not Green Mountain Power, and when rate increases are entertained with Green Mountain Power, the Green Mountain Power is the fox. They are going after the ratepayers to earn a profit that is reasonable, and they have to get approved. For the munis and the co-ops, the chickens own the organizations, and they're going in for basically their own purposes and don't want to pay any more money than they have to. I think it was either Riley or Mr. McNamara who said that if the munis came in or the co-ops came in and made unreasonable requests, even under this proposal, the Public Service Board would refuse them, and they wouldn't let them make unreasonable requests. We have been assured that in every muni or every co-op, there is a board which acts on their behalf and takes a vote to put forth a request for a rate increase and maybe a decrease. What we have not been assured of is that there is a minimum standard for public involvement before those boards or those select boards make the request. And perhaps the PUC, when it said they would never let something happen, is because the PUC knows the individual munis and co-ops and would intervene and say, well, you don't have you didn't consult your ratepayers and you took a shortcut. I don't object to giving the ratepayers and the munis a chance to come in and make their case under this provision, provided that there is an assurance that the ratepayers have a chance at a public hearing before the local boards or selectmen vote to ask for the increase. That there's a public hearing on the record and there's a opportunity for the ratepayers to weigh in and appeal to their locals. That's my only request.
Okay, I remember the discussion last time we took this up, and I think but I thought we had agreed. And I remember to the detail as to whether or not you voted on the same night that you had the public hearing, that we would amend this to require that there was a public notification and a hearing, and I believe that, and you had draft language. That's where it
I
came
asked for
from.
draft language
Okay.
to give the people at that
all
hearing
right.
a chance to scramble and put in a petition and
Okay, and I think
whatever number of
that-
hours the PUC would
Okay,
recommend.
Senator,
Yep.
we've got a long time here. I think that we agreed that we would have some language that would guarantee that there was a public hearing. So and I remember my suggestion was you put a notification in the bill. When you sent out the bill a month prior, that you get a notice that we're having a public hearing on Tuesday night to talk about raising your rates 10%.
Sounds good.
That way, everybody that pays 2%, whatever.
Sounds good.
And I think that just did not make it in because we had the drafter switch. And Ellen wasn't here for the last one. I think we've agreed on that. I don't believe anyone
Yes.
objected. The question now, and we're either going to answer it now. I will drop. I thought we had extra time, and so I stuck the nurse compact in because we've got to get that one out. No, we don't have to get that one out this week. So we will use up that amount of time on this and then take a break by 4:45. But I'd like to get the basics on this one agreed to. So I think, does anyone oppose putting language in that would require public notice and hearing before the vote of the governing body? All right. So Senator McDonald, you can make sure that Ellen gets a copy and she can fine tune it. But I think that
That's
we've
excellent. So what do we do about the time between the public hearing and when the board makes a vote and goes to the?
I think it
for,
would be at its next regularly scheduled meeting. Would that make you happy?
If that makes the representative, if that makes Melissa Bailey happy, that's a fair time, makes me happy.
Okay. Melissa, unless you yell no, I'm going to move us along.
Seems like a reasonable approach.
Okay. Next, then we have, and we haven't talked much about section O, which is the I'm not even sure what we're calling that, but kind of experimental incentive rates. What are we calling that, Ellen?
It's kind of like a pilot program.
Yeah.
It allows them to have pilot programs.
Or some flexible rates, probably,
And it's
things
related
like
to the tier
off-peak
3
power.
innovative program.
Tier 3?
Okay. So that gets us to the big one, everything north of O. And so far, we can go with what the bill asks for, which is the flexible rates. I believe the DPS or the PUC can intervene at any time if they have concerns, and 5 ratepayers can request and will get a full-blown hearing. What the department has asked for, okay, Ellen?
Sorry, so this is all partially my fault. I want to take some of that. So, because in Melissa's proposal from the last meeting, she had included the language about 5 affected ratepayers being able to object.
Okay,
So that's
right, because the question was, could just one disgruntled person appeal every time?
So do you want to add that to the draft? It is similar to existing language. Do you want to add the 5 affected ratepayers can object?
I think it sounds like as good a definition as any, Senator McDonald.
I would ask Melissa if she didn't think that there was a percent. 5 seems like a low threshold to me to upset a co-op that may have 5,000 customers, to have 5 people. Maybe there should be some sort of percent that shows that there's more than just a family that lives down the road that everybody signed it. And I would ask the PUC what's standard for such things. Just so, unless Melissa thinks that's fine.
Again, I can just respond. Again, we took that from the existing statute, which allows for a group of 5. I would assume they'd have to be unique customers, not one household, as you point out. But we'd be comfortable with a percentage threshold, but we're also comfortable with 5. Essentially, the process would be if 5 customers were aggrieved by this rate change, it kicked us down to the full process, which again is just a ratepayer protection.
Okay, I've got Senator Pearson, then Senator Bray.
I have another question for Riley. Riley, this notion that your sort of, let's call it protective glance exists under any of these schemes. And I don't mean them in the scheming way, but any of these
scenarios.
Thank you. Help me understand that, because in a rate review case, you're billing back. So how does the department just bear the expense of that glance, or how do you imagine that working?
Typically, we don't actually bill back unless we actually retain outside experts. So when we bring in an outside expert, that's when we kind of we essentially revert to a kind of a bill back mechanism. But we have, staff, and we have, we make decisions. We have professionals that are there, and I've had on hand in some of our committee discussions to kind of help us if need be. But I'm sorry, I'm losing the thread here, but we don't normally bill back for that. They're just monitoring and eyeing these things, and they'll do that. And we always have the ability to reach out and get additional information if we have questions.
Okay, thank you. I appreciate Senator McDonald's addition. I think that's smart if we're going to do this. I'm still not convinced that this rate piece is that I'm comfortable with it, but maybe if I'm the only one, I'll just kind of let it go. But
no, I think
the notion that voters approving a municipal utility have anything like, I mean, it's proven actually in the handout. They in Swanton, the voters said, yeah, go for the 16%, right? I mean, there's not the expertise. It's an unfair question to ask voters to have that oversight, I think. I mean, we need that for transparency, but I don't think it comes anywhere close to replacing the department or the commission.
I think your Riley's proposal is very much in play here. That's what I'm trying to figure out. Senator Bray.
Yeah, it's just a quick question. I mean, 5 ratepayers does seem like a bit of a hair trigger. And I can't remember what we do for getting stuff on town meeting ballot, like there's a percentage that's supposed to, that may be too high, but we do use a percentage and I just don't recall what it is. I think the goal is to keep frivolous things from being on town meeting ballots, but
I think it's
I don't know,
10%, but it's been a
That's what I
long
thought.
time. Senator
So-
Hardy,
I think it's 5% of the.
5%, okay.
But I think that the 5 ratepayer was, as Melissa said, and Riley, I think confirmed, and Ellen, it's based on current law. So it's already in statute that triggers a rate review, I think, for in another case with 5 people objecting. So that's why the 5 came up. But I had a question looking at the language in my list here. In the bill on line 15 on page 1, there's this language, this is not more than 10%, and we added the word cumulatively from the rates last approved by the commission. And what if we added in there, I have on my list that Melissa, and correct me if I'm wrong, Melissa, because I'm not Alice Nicka, so my notes may not be perfect, that you had said cumulatively over 10 years. So maybe, and Riley was proposing 7 years. So maybe we have split the difference over 8 and say 8.5 years or 8 years, that not more than 10% cumulatively from the last approved rates last approved by the commission, or 8 years, whichever is shorter.
I was thinking 8 years.
Yeah.
But-
And then I also have in my notes, Melissa, that I have add DPS on your list of things that you suggested, and I didn't write any more than that. And I'm wondering, do you remember what you were talking about?
On that one, I do not remember. We added the customer notice at the same time the DPS gets notice. I don't know what add DPS would reference. And just to clarify, we didn't propose a 10-year threshold. The only thresholds that VEPS is proposing are tied to the rate. 2%, you can deviate 2% in any given year, and 10% cumulatively from the last rate. So
Okay.
rates are 14 cents. You could raise them by 1.4% before you'd essentially exhaust your flexibility and need to come in for a full review.
Okay. Well, I was just thinking, to Riley's point of coming in, making it 10% cumulatively or 8 years, as a means to maybe make people feel better about having the department check in on the rates. And I think the objection language with 5 ratepayers makes sense if that's already in the law. And if we're uncomfortable with that, then we want to change what's already there, but it's consistent with what's already there.
Okay. Just trying to move this along. I think we've already decided we're comfortable with the public notice before, on a day separate from the vote, public hearing. I think we're comfortable on giving them the pilot ability to try some new incentives and rates out. I'm hearing, so before, does anybody not want to do flexible rates at all under any circumstance? Okay, so then we're down to the circumstances. It's been proposed that if you meet, a utility, not investor owned, takes advantage of this flexible rate structure, that they would have to come in. We've got 7 years, 8 years, pick a year. At least once every X number of years for a formal review. I'm assuming since they seem to be pushing it out to 10, we would do something less than 10. Is that where the committee is comfortable going? Senator
I
Pearson.
want to go back in time. I love this. I just think we should take this part out, but I'm clearly in the minority. Melissa said, if we force this review, it will have the net effect of discouraging people to use it. Do I have that right, Melissa?
That's accurate. For the
So,
municipals, they would be less likely to utilize the flexibility. There may still be some that decide it's worth the full rate case proceeding every 7 years. Maybe some that don't. Again, I don't anticipate the municipals raising rates very frequently or to a high magnitude. They traditionally do not do that. So to go through the rate case every 7 years and then have a 2% increase and then have to go through a full rate case again in 7 years, it'll be a trade-off that they'll have to consider. It will discourage using it. I don't know that I won't say that it means that it will not get used.
well, but it's not 2%. It's 2% a year potentially. I mean, I agree with you. We always do this. We take the math to the ludicrous extreme, but we have to be protective. But what we're talking about is the potential of 2% a year. But basically, if you're in that scenario, then you have to do a full rate review every 7 years. And you're saying that may discourage people from taking advantage. Is there a timeline? Is it 12 years might be worth it? Or is there a way to think about it that way?
I think our comfort level is as needed. So it may be more frequent than every 5 years. If somebody comes in for a 2% rate increase for 3 years in a row, the DPS still may say, what's going on? Why do we need to go 2% each year? So for us, it's really based on the unique circumstances and when that added review is needed, based on whatever the utility is filing for information justifying that rate increase, rather than filing for 2% increase in a 7-year period, and you've essentially exhausted your flexibility and no longer have flexibility.
Senator Hardy.
So under current law, DPS, Riley, you guys can come at any time to a municipal electric company and say, you need to come in for a rate review. Is that true?
We do. I'd say we kind of, sharpen our pencils when there's a rate request, and it gives us some focus. And I think that tends to be when we, really apply ourselves to what the situation is with the individual utility. But yeah.
So if there are some utilities that haven't come in for like 10, 12, 15 years, and you're concerned about that,
yeah,
why haven't you asked them to come in?
I actually think that we should, and I think we will. It's a question of really kind of rethinking the way we do work. If you went back 10 years and you looked at what's happened over the last 10 years, you would be amazed at how many of these cases had come in. But the underlying cost drivers have substantially changed, and we're in a period of comparative, cost management or cost declines, steadier costs, and the dynamic has changed. And I do frankly think that we do need to rethink essentially how we exercise the discretion that we have relative to what's in front of us.
Yeah, it sounds like you should, especially since if Melissa's saying DPS can have us in anytime, and that's the safety net,
right?
But the evidence is such that we're not seeing you doing that, then it doesn't leave us much comfort. So I think that might be what some of us are feeling why we feel like we might have to have another safety net in there. And
well, yeah, I mean, there's, as I indicated, I do think it's incumbent upon us to kind of rethink, how assertive we've been in kind of, investigating and looking critically at the rates. But even if we kind of change our paradigm, there's going to be new leadership at the department from time to time, and they may feel differently, and that doesn't necessarily solve things on a systemic basis. But I take your point. We are proud of the work we do. We feel like we do good work, but I'd say we focus when there's a rate increase, and we probably need to challenge ourselves a little bit more there.
Thank you.
Okay, Senator Sirotkin.
Struggling, especially with Senator McDonald's comment. I mean, all of this seems to assume that rates are going to go up. What do we, if there are cost-effective measures that would force rates to go down, how are we protecting the public to bring a rate case on that issue?
Is that a question to me or?
Yeah, I guess it is, Riley. Yes, I guess it is.
Yeah, I don't know that. I mean, this creates, in my mind, this is creating what I view as kind of a healthy dynamic. If the utilities really view this 7-year kind of lighter path as an inducement to actually do things differently. So I'm hopeful that it's always helpful when a utility comes in and they're ready to essentially engage with the regulatory apparatus. They have all their paperwork ready. They have the leadership of the municipality behind them, and they're in a cooperative mode, and that's good. And so if we can encourage that kind of dynamic, I see that as a positive. But I think that can imply, even if a utility has had no rate increases, but they want to preserve that flexibility to have smaller rate increases going forward, I think that's potentially a positive. I also think that Senator Hardy's right, that I think we need to potentially think about how the dynamic has changed, because I think the cost drivers have shifted going forward. I don't think we're going to see the same kind of cost pressures, except in one-off kind of instances where they're upgrading platforms, software platforms, or investing in technology, or things that help to essentially fend off what really concerns me, which are some of the longer-term cost pressures that are associated with. And Melissa and I were in testimony earlier today about electric vehicles and electric vehicle rates, and the implications for grids and those sorts of things, which are things that concern me. And I think we can ward those off with sound, sensible kind of investments in rate design and platform technologies that allow for cost containment around those. I do see the electric utilities becoming, over time, more like technology companies than fuel dependent companies. Historically, they depended on the market and oil and natural gas and the like. Going forward, I think there are that paradigm is beginning to shift.
Is a compromise here a couple of things? The mandatory review over 10 years, could it be somewhat of a light review as opposed to like a Green Mountain Power kind of review? So it cut the cost down that way. And I was also looking at subsection C here. What if we said 10% over a 10-year period? There's something to play with that number. We're talking about possibly playing with the 2% number, or the year of when there has to be some review or not.
Okay.
I mean, there's other factors to play with to get to yes, I think, but really have the. I am concerned with your answer that, there could be periods of time where rates should go down and the utility, municipal or otherwise, just sit back and say, no one's going to object to no increase, when really someone should be reviewing and saying, the cost of this power has gone down, and we should give a break to ratepayers. I'm not saying that the municipalities wouldn't do that, but I guess there is that possibility.
Yeah, I mean, there's, 50% of the costs are kind of the power that goes in to generate the electricity, at least on a statewide basis. There's a lot of volatility, particularly in current circumstances, because that depends on fossil fuel prices, market rates, also market prices, and those can fluctuate quite a bit from year to year. I believe that recent years have been more favorable. You only have to go back to like 2014, see major swings in natural gas prices and the associated impacts on utilities, and that created some pressures. The utilities always face the cost pressures associated with nominal inflation. So, labor rates and healthcare costs and those sorts of things are factors that all of our utilities have to kind of manage and keep in check. But that's not the majority of most utilities costs. Most of the costs are in the capital and in the cost of wholesale power, or the cost of market power, the generation side of their business.
Okay. Committee. I think we've decided we're going to do the pilot, and we want to find a way to do flexible pricing. The question is, how much, how long, when do you have to go in for a rate review? Somebody said 10% or 10 years, whichever comes first, I think. And then, we can see how that works out. I'm trying to get this so we can get it out of here. Senator Bray.
Well, I'm just pausing to think about the whole thing. It feels like there's an assumption that this is always going to be an adversarial process. And I don't know if that's true. I mean, it's like that was kind of the setup from the get-go of, well, this will be adversarial. And I would like to think there's a way that it's actually more, helpful to all the parties to go through such a review. That may be wishful thinking, but Senator McDonald's smiling. I don't know that everyone says go to the dentist; it'll be good for your teeth. Honestly, it would seem like a rate review could actually be helpful to all the parties, the customers, plus the utility itself. I mean, if part of the hassle is that it's a pretty formal review, not something they would ordinarily take on, to me, it also seems like the department could be offering technical assistance. I mean, by virtue of being moved through the process, you might get asked questions you would not otherwise examine. And I don't feel like we're picking up on any positive way of looking at this. So I regret that part so far. And I wish that we could find a way to have it be something other than just parties, sort of at loggerheads here.
Well, it says a full rate review. And I'm not clear if we're talking about that. I think we're talking about, let us sit down and talk about, if you've got this money and, are you actually raising rates enough to cover the technology you're going to need to run your plant in 2 years? Are you, more of a consult might be a better word.
Right.
Would
A
that?
lot more attractive.
Yes.
It also fits in, sorry, you're making me, sorry to interrupt. they have to do integrated resource planning, which is also, a look ahead and anticipating expenses and meeting demand and looking at an evolving grid and things like that. So I don't know if there's any relationship to the IRP work to a rate review. Like, as part of preparing your IRP, could that facilitate a visit with the department? That would be helpful. I don't know.
Okay.
I mean, just to be clear, we engage, I think cooperatively with utilities on the IRP framework quite significantly, and we also view kind of our role as cooperative. So whether we call it a full rate case or a full rate review, what we're asking for is for them to come in prepared to essentially share materials and ready to potentially defend it before the Public Utility Commission. But we actually encourage utilities to come in before they file something and start the conversation with us. And we see that as a cooperative back and forth engagement. And that's really what we're seeking.
Okay. I'm trying to move our next set of witnesses back. Ellen, can you bail us out?
Apologize, but I have a one remaining question on my list that you haven't discussed yet, and it is about the year after which
yes, yeah.
So one of these utilities has to have received approval for a rate change from the PUC on or after what date?
Yes, and we've gotten a bunch of emails, and I think one's it's been 3 years and the other it's been 1 year. For 1 year, could we do why couldn't we just say you can do the flexible rates? You have to come in for 10% or 10 years cumulative, starting with the last date you had a formal rate review. So if you had a formal rate review 5 years ago, you've got 5 years before you have to come in. If you did it a year ago, you've got 9 years, but that there's this kind of consistent 10 years, because if we go back 3, somebody's going to say, but I was 4 and, or I was in twice. And so would that work? Starting at can you do that, Ellen?
What's the problem that's solving?
I think that they wanted to make sure that you would have, before you started doing flexible rates, that you had had a recent review by the PUC of your rate structure so that you were starting out on solid ground.
Our Senator Cummings, I like that proposal because it also provides a rolling basis. So DPS isn't doing everybody's rate review in 10 years. So that
there's that.
Yeah. So that if somebody went back 3 years, then they would have 7 years from now. If somebody hasn't been in for more than 10 years, they have to come in. And it's set moving forward. It's kind of like I'm on judicial retention. We have to review every judge every 6 years, and it's a rolling basis, and they get super nervous about the process, but I think they all learn something from it, and hopefully it makes them a better judge. So I think Senator Bray is absolutely right that this shouldn't be always just looked at as a negative process. But I like your proposal, Ann.
Okay. Committee. Can we agree, we can still wordsmith, but on that concept that if you choose to do the flexible rates, You can still wait it out 15 years and not come in. But if you do the flexible rates, you must come in for a rate consult or hearing every 10 year when you hit 10% or 10 years since your last formal rate review. Does that work?
So,
No?
no, I don't know. I said so, because
Oh.
I'm trying to understand it. So
You say no, you better have an alternative.
you got, somebody got a rate review in 2015.
Yep.
They want to take advantage of this.
5
So
years.
As soon as they file their sort of light review 2%, they're into a 10-year window or a 10%.
No, because I assume you've all gotten, there was somebody, I think it was Stowe that was in a year ago, and then there was somebody else that was in 3 years ago. And if we say, okay, you start at 3 years, we're going to get, but I was, it cost me $1 million and I was 5 years ago. So if we say 10 years is as far as anyone should go without a review, we say, starting with your last review, which gets us off the hook there, you can do flexible rates until you hit a cumulative 10% or 10 years from your last formal rate review, and then you have to go in for a rate review.
So for a bunch of our folks, they'd have to start with a rate review because they haven't had one in the last 10 years.
If they haven't had one in the last 10 years, which I think is, well, yeah, if they haven't been in 10 years, if we're really serious in our concerns that 10 years is a long time to go.
Right, and Chris, in your example, if it was 2015, they would have to come in 2025. So I think we could say 10% cumulatively or 10 years, whichever is sooner.
And you don't have to
Not
do
sure I
it.
have a concern. I'm just trying to understand.
I mean, that it would move us forward. And I'm trying to move our next witnesses so you can get a break here for a few minutes. But I'd like to give Ellen something to draft. Is that acceptable to have drafted?
So does that?
Okay, our next witnesses are been moved to 4:15. Senator Sirotkin.
Does that mean, Madam Chair, that assuming they meet the threshold for starting this flexible review, they could raise it 2% every year for 5 years without running afoul?
Into a formal review. Yep. After public hearing and vote. Ellen, can we?
Well, I think I may have drafted it. Would it help if we looked at this language? quickly?
Yes.
That's
where I wanted to start out, but
I know. Well, you know.
Sidetracked.
So I'll put it up on the screen. What I think we could do, this is just what I've come up with in the last 10 minutes, is we could delete, sorry, let me share my screen. If I move it up, can you all see my screen?
Yes. Yep.
Okay, so if I, previously, this language about the date was farther down in its own subdivision, but if I add it to the list of sort of qualifying things, so it would read the municipal corporation or the electric cooperative shall be authorized to change its rates for service to its customers if the rate is applied to all customers equally, not more than 2% during any 12-month period, not more than 10% cumulatively from the last rates approved by the commission, and not going to take effect more than 10 years from the approval for a rate change from the commission. That's not quite right. From the last approval.
Okay, yeah. I think that says what
May need a little bit of grammar
wordsmithing,
check, but
yeah,
I don't think that's quite right, Ellen.
okay.
okay.
Because we want it to be 10, not more than 10% or
Or more than 10 years, whichever comes
is
first.
sooner. Yeah, because
Yeah.
the way you have it drafted is as an and. I don't know. It doesn't seem quite right to me, but
I think it should be an or. It's not more than 10% cumulatively or not more than 10 years from the last formal rate review, whichever comes sooner. I don't know if that's necessary. That do it?
I think it has to be whichever comes sooner because we want them to get a rate review if they haven't had
10
one
years.
in 10 years.
Okay. Committee, can we agree on that? Ellen, can you take that down so I can see everybody? Can we, is that to move us forward?
I guess I don't know, I guess, could I reserve the right to think about the concept of 2% a year for 5 years? I'd sort of like to dilute it a little bit.
Okay, then they have to come in for a rate hearing in 5 years.
No, but I mean, if we had the concept of no more than 10% over a 10-year period, then they would be in a position of only doing 2% every other year.
Yeah.
I don't, we're going into a little uncharted water. I don't know where we came up with the 2% to begin with,
It
but
was the proposal.
yeah. I don't know, go forward, you know. I just-
Okay, can I have Ellen draft this?
Absolutely.
Okay, and the alternative is if we can't agree, I think it's going to be Friday, then we just strike this whole section and send it out. Okay, Senator Bray.
Yeah, I mean, I think it'd be great to get a draft and then send it to all of us, that kind of a thing.
Okay.
Because
that would be
this
good.
one's a bit tricky and super non-ideal for Zoom, I think. So it'd be great to be able to print it out, read it, think, and then have
I
another
am
talk.
really missing my printed thing from the,
Yes,
captive
exactly.
insurance. I need my notes. So Senator Hardy.
Yeah, I'm wondering what people feel about the language that I had suggested a while back that might get to some of Senator Sorokin's concerns, maybe, about saying that DPS shall take into consideration these incremental rate changes when they do their formal rate review, so that they're not sort of lost as givens, if you will. I'm not sure exactly what the language should be, but that kind of concept of making sure that those are taken into consideration and that they may, in their formal rate review, go back and say, well, actually, we think you should go back to a lower rate.
I mean, we don't get the interns to review rates here. I mean, this is a whole body of professionals, what they do. I don't think we need to stipulate that.
I don't either.
Whole context.
Well,
Okay.
I guess I might say that in a permissive sense in case there's something that's flagged to people. I think practically speaking, if there have been no hidden message here, padded rates under the circumstances. If that's discovered, that money's probably long gone. You know, it's been used by the utility for maybe things that were not maybe absolutely necessary, not subject to review. But I agree with Senator. I think and maybe they have that power already, but I wouldn't say they have to go back and look at the last few years and say there could have been savings here or there, but at least they wouldn't be locked in to looking only prospectively at new rates and what the status of things are if they find some.
I don't think they are, since they gave Stowe a decrease in rates.
Well, that may be for the future too. They
Yeah,
just don't know
okay.
for the future, but they may find something in the last year. You know,
Well, Senator Sorokin, why don't you think about some wording that would help? I'm trying to get everybody a 10-minute break before we get into cannabis, and that's legislating, not smoking.
I'll talk to
Isn't that backwards?
I think, Ellen, have you got enough to work on this? And feel free to talk to me or any member of the committee anytime. And Senator Sorokin, if you can come up with some wording that would work for you, we can take a look at it. And
I will work with that. And
okay, and somewhere there is a thing from Senator McDonald's, which he will get you, even though he's disappeared into the cows. Okay, folks, we've got till 4:15. So stretch. And then we're going to see, we've got the witnesses to talk to us a little bit about the cannabis bill, which is another one that needs to come out this week because it was sent to us yesterday. So